it can be a huge move like we saw in the 1979, 1980 debacle. I mean, silver went just vertical for, weeks, but it was weeks, not months, not years. The rest of the category is 138 million ounces. So if you multiply that by 0.25, you have your number. So 100 is 25, 40 is 10. So 35 million ounces would be a round number, doing it in my head. Now the eligible is 318 million ounces.
In this exclusive interview, precious metals expert David Morgan shares his perspective on silver's potential for a historic market move. Drawing parallels to the 1979 to 1980 price spike, Morgan explains how silver can move dramatically within weeks, not months or years, creating unprecedented opportunities for investors closely monitoring the market. Morgan breaks down the current silver supply dynamics, noting that the total category stands at 138 million ounces. By considering just 25% of that supply, approximately 35 million ounces become highly significant in driving market action. Additionally, he emphasizes that the eligible silver pool totals 318 million ounces, highlighting a constrained supply scenario that could amplify price volatility. Based on these conditions, Morgan predicts that silver could test $100 per ounce if supply remains tight and demand continues to surge. He stresses that even a relatively small shift in available physical silver could trigger dramatic price action, similar to historic surges. Investors and precious metals watchers are encouraged to track inventory levels, delivery constraints, and market signals closely, as these factors will likely determine silver's trajectory in the coming months. This analysis provides a framework to anticipate potential market movements and price targets. If you found this helpful, like, share, and subscribe to The Metal Bar. Turn on the bell so you don't miss any updates, and comment below to share your thoughts on it. Appreciate you for tuning in. Now, listen to the interview.
The Chinese market is low on silver, and that's what's being reported almost everywhere. And they're putting new facilities out in Hong Kong, Dubai. I'd have to look it up. You might help me there, Ivan. I think it's a couple places. And it looks like the clearing integrity is going to be more out of the Chinese markets than it is at either London or the COMEX CME arrangement. And that's kind of sad in a way. I mean, I'm for a free market anywhere it is. And, as the old adage goes, money goes where it's treated best. So if the silver market's treated the most fairly in a certain market based on the people that produce it, then it's going to filter over to that area. The problem with silver, as we all know, is 70% comes out of base metal miners. The big boys at the top, the Rio Tintos, the BHPs, some of these huge conglomerates really don't give a fig about it. It's just a bookkeeping entry on their balance. And so they are in bed with the bullion bank, basically give them their book. If the warehouse supply shrinks, the allowable deliverable position shrinks with it. Obviously, if you have 150 million ounces in the registered category, you can take 25% of that, and then 25% of that does come off. Then the next month for delivery, you would have a lower number, obviously. So I think it was important to get that out there because a lot of information that isn't in alignment with what the CME facts are,
right,
might give people the idea that, well, we've got them. We're asking for delivery of more silver than exists on the CME. If you took the 35 million off the 138 million this month as the amount allowed, that leaves, I'll just round it down to 100 million. So now you got 25% of a lower number. 25% of 100 is easy. That's 25 million. So that would take it down to 75 million. And we've been down under 30 million a few times. I've watched that. I've watched this not daily, but I do pay attention to it. And,
okay.
Been under 30 million a few times. And I've always said, geez, that's not very much registered.
No, that's not a lot at all.
Someone could scoop that up and really cause some pain. And every time it got in there, it didn't last for very long. It stayed there, from the best of my memory, couple 3 weeks maybe, and then you see this big import of silver from somewhere and the registered category moves back up 50, 80, 100, whatever. This last time it was under 30 and it stayed there for quite some time, and I thought, geez, this is looking like possible squeeze situation,
right?
And I will say it went for a couple months anyway, but then that day came and all the silver came in, and of course the the amount of silver that's in the COMEX right now is actually pretty darn significant. We're up at 450 million ounces total.
In this in-depth analysis, veteran precious metals expert David Morgan highlights growing stress in the global silver market, particularly focusing on supply constraints in Chinese and international hubs. According to Morgan, but the clearing and integrity of silver delivery is increasingly shifting toward the Chinese markets rather than traditional centers like London or COMEX. He emphasizes that silver is largely produced as a byproduct of base metal mining, with major conglomerates like Rio Tinto and BHP treating it primarily as a bookkeeping entry, not a strategic asset. Morgan breaks down the current supply scenario, with roughly 138 million ounces in the registered COMEX category, taking 25% off leaves about 100 million ounces available. As delivery demands increase, the eligible amount could drop to as low as 75 million ounces, creating a potentially tight market. Historically, registered silver has dipped below 30 million ounces several times, triggering short-lived supply squeezes. But Morgan warns that if such a squeeze occurs again, the market could face extreme volatility. He projects that if registered silver continues to tighten while demand surges, price movements could accelerate rapidly, creating a possible scenario for sharp upward spikes. Investors and market watchers are urged to track warehouse inventories, global imports, and registered COMEX positions closely. Silver's current dynamics suggest a highly sensitive market where even small changes in deliverable supply could trigger outsized reactions, making this a critical period for both short-term traders and long-term investors. Let's get into the interview.
How this conversation might go. And so I want to kind of go back into history for a bit and talk about what happened during the Buffett purchase, okay? And that was in 1999. And at the time, Buffett was buying carefully, a little at a time, accumulating, it's called. So he's accumulating silver. And then all of a sudden, there was this massive move, and Buffett basically came out. And I forget all the details, but he ended up buying 129.7, or we could round it up like everybody, to 130 million ounces of silver off the COMEX. And that is a huge amount relative to what the COMEX has. And what happened was about 90 million ounces were delivered and 40 million ounces were not. They were delivered, let me say delivered immediately. 40 million ounces were delayed. Lease rates spiked up and stayed up until the 40 million ounces was delivered. It was all sent to London, and London started the SLV through JPM with 130 million ounces silver. When that took place, they put a rule in that said you could only deliver 3,000 contracts. So 3 times 5 is 15, so whatever that is, 15 million ounces. That didn't, I don't know when it stopped. It didn't last very long. If we could clear this market and we get some stability at a given price, and the physical market meets the demand, then we could see some stability and kind of build off of that. It isn't looking like that at this point in time, but this market could fool anybody, including yours truly, and I've followed it as long as probably almost anyone. According to the CME, in the spot delivery month, no trader may hold or control more than 25% of the CME estimated quote-unquote deliverable supply of silver.
Mm-hmm.
We all know that's one contract is 5,000 ounces. Deliverable supply is the registered amount, which is ready right now, can be bought by anyone, plus the deliverable eligible silver in CME approved warehouse. So that's a little touchy. Do we know? Well, we know it's all available. We also know that it has to have the medallion. In other words, the owner's got to sign a piece of paper, basically, electronically or otherwise. It says, yeah, I want to put this up for sale. So that's interesting. But if you just look at the deliverable silver, I'll do it while we're talking. I'm sure you're going to make some comments. I prepped for this interview, but let me get this warehouse stocks up there.
In this detailed discussion, silver market veteran David Morgan revisits one of the most pivotal moments in modern silver history. At the time, Buffett accumulated silver cautiously, yet eventually bought approximately 130 million ounces off the COMEX, a massive move relative to the total deliverable supply. Morgan explains that of that total, about 90 million ounces were delivered immediately, while 40 million ounces were delayed, driving lease rates higher and keeping the market in a state of stress until full delivery. This historical event demonstrates how concentrated buying can disrupt the delicate balance between physical and paper silver markets. Today, Morgan warns, Similar dynamics could re-emerge as registered silver supplies remain limited, and delivery rules still restrict market movement. He emphasizes that while the CME allows traders to hold no more than 25% of estimated deliverable silver, actual availability depends on signed ownership documentation and warehouse readiness, making the market extremely sensitive to shifts in demand. Morgan predicts that if physical supply and deliverable silver remain tight, even modest demand spikes could trigger significant price moves, reminiscent of past squeezes. Investors and market watchers should closely monitor warehouse inventories, lease rates, and COMEX deliverable positions to anticipate potential volatility. If you found this helpful, like, share, and subscribe to the Metal Bar. Turn on the bell so you don't miss any updates, and comment below to share your thoughts on it. Appreciate you for tuning in.